Happy Thursday. Welcome back to the final hour. Sorry for the late start. Just had a long I had a webinar that went a little bit longer. Here we go. Extreme sentiment swings. Wanted to dissect a little bit today. We are still making some fresh highs in the market. We're up around 590 on the SPY right now. We do have a major OPEX cycle tomorrow with the monthly expiration for May 16th. We do have the VIX expiring next week on Wednesday. I am curious, as much as everyone else, technically speaking, are we going to get a gap fill from this U.S. China gap on Friday to Monday? The futures market ripped Monday morning at 3 a.m. To me, I see that as a monster move to this week. That's pretty much what propelled the markets higher. But I think that gap and that inefficiency is likely going to get retested or at least filled. I certainly hope it is before we get to all-time highs. So, extreme sentiment swings. We had too much fear in the beginning, with Trump and co. and Liberation Day and after Liberation Day, way too much fear, extreme fear in the markets, in fact. And then now we have a swing where it's probably getting up to too much optimism. So, what's interesting is if you swing one extreme, you swing the other extreme, probably the market's going to settle somewhere in between. I mean, that's ultimately like when the dust settles, you're wondering, like, are we going to be at all time highs and higher? Are we going to settle back in and have some type of like, all right, so the bad stuff was kind of quickly eroded. The good stuff is now being priced in. Can we justify higher highs? And look, anything's possible. Like, I don't know. Your guess is as good as mine. Are we going to all time highs? And we talked about this. I asked every session that I taught for the last like several weeks. I'm like, are we going to hit? Look at SPX. I was asking traders in here, and I was this was my camp too. I'm like, are we going to be hitting the retest of the lows, or are we going to hit all time highs? And I was in the camp saying, I think we're going to get closer to retesting the lows before we come back to retest the highs. Well, that didn't happen. You know, So this resistance level held for a second, and we broke above it, bounced back below, and then off we go to this pause, and then here we are up again. 1, 2, 3. I mean, we had one pause day. We had 3 days positive. Monday, Tuesday, Wednesday, Thursday. We have 3 out of the 4 days positive. I want to see what Friday looks like too. Is there profit taking? Is this market going to squeeze even friggin' higher and hit 6,000? I'm looking at some real levels here. We might get up to 600 on the SPY. We might get up. Maybe it's not that far away. Hell, we're only 100 points away, but you never know. So anyway, I'm still watching some covered calls and some income. I've taken some good profits this week. I've taken a ton of profits the last 30 to 45 days. And I'm hoping we get a dipper pullback so I can level myself in. I think the bullish posture is pretty solid. I think that the market, offers some generous support in here and here and here. I think the bullish posture, like we could see the SPX come all the way back down to like 5,300, even 5,100, and I would still be pretty bullish on the market. Okay. But what would be frustrating, I've mentioned this now several times, it's like, do we just keep freaking going up? Is that it? Like if you just didn't buy it, you just didn't buy it in here and have the courage to hold this thing through gap after gap after gap after melt up low volume. It's just, everybody's cautious in here, but it's like, well, I guess the whole language has changed. So here's an example. Fear and greed index. If you remember looking at this in March and April, this thing was it was like 20. I remember reading this at like 21. Extreme fear, like one of the worst I've seen in years, probably since COVID, right? And that was like a 45-day cycle. Here we are in greed, like we're creeping up into extreme greed, right? We got market momentum showing extreme fear, which I think is interesting. And that's just because we still have the moving averages at these way high levels and the price just crossed above them. But strength, we have greed and strength. We have extreme greed and stock price breadth. Okay. Put call options, we are sitting way down here at crazy amounts of call options. It's greedy. Everyone's getting long. All those puts that were put in March and April are expiring worthless, and that's a pain trade for these last, probably 30 days or so. Market volatility, we had one of the biggest vol crushes ever. We're back into like the, $18, $70 zone for the VIX. Safe haven demand, yields are going higher, right? So the difference between 20-day stock and bond returns, bonds are garbage and stocks are where it's at. And so we're showing that extreme greed because stocks are outperforming the crap out of bonds right now. Junk bond demand, we still have high yields. And so people are still, latching onto some bonds. But look, I hate the bond market. I'm not going to lie, like TLT doesn't look good at all. Okay, TLT is just off of these lows where, we might just sit here and just simmer around these lows for a while. I do have a TLT position. Let me find it here. TLT. TLT is here. So I lowered my diagonal call side down. So I have a 65 by 89. Um, I'm looking to so May 30th. I'm looking at like what's my expiration. I will continue to aggressively lower my exposure to TLT. I do not want to be in bonds. I think that the market, if we have a pullback in stocks, I do think that the bond market can squeeze up a little bit. So if we hold these lows on TLT, I could see the bond market squeezing up to find some gaps, squeezing up a little bit to find some recent highs. My calls at 89. I'm not trying to be a hero here. I don't know how low this is going to go. We might be setting up with, this is essentially the couple of days the bond market broke. We're looking at something like this perhaps. Maybe it sets up with a big falling wedge. Maybe the market does have a squeeze to the upside. Maybe, right? Also, we might just stay in a crappy bear market. This bond market's been in a bear market since 2020. Okay, it's not good. We have lows back here in 2023 that we may be revisiting. I think that there's plenty of support here, but just be careful. I want very little exposure in bonds. I have some, but I'm trying to get rid of it by lowering my cost basis. And the rest of what I'm doing is a lot of covered calls. So, my portfolio is tilted bullish. I have a pretty good mix. I mean, I'm long gold, I'm long silver, I'm long Bitcoin, I'm long natural gas. I got out of oil. I don't really like it that much. I am long the indexes with a slight bullish tilt. But I'm waiting. I'm waiting for some pullbacks. I want to see some pullbacks so I can add more exposure. I like doing ratio spreads. I like doing 1-1-1s. I like doing strategies where I can set the level that I want to buy it at. I do not want to buy the SPY at 590. Okay, I bought the SPY at 496. It's literally up nearly $100 a share. So I timed the market pretty well with a 496 entry when this low was about 482. So it wasn't bad, you know, and we had about a 3 or 4 day window to buy it there, and it worked out pretty well. But I dumped my positions back here when we started to stall at this major resistance. I mean, if you're looking at the charts, you can tell that this cluster of EMAs, this previous March pullback level, I was not trying to hold this thing and be a hero. I thought we would hit some resistance, fall back down, maybe have a higher low to then buy a dip from, but none of that applied. It's like this market's like, meh, extreme greed. So the sentiment swings have been pretty wild. But like I'm saying, I just want to get a bit of a pullback. If we get a pullback here, I'll start looking for more positions, willing to own the underline. I don't mind owning, at a time, 100 shares of SPY or 100 shares of Qs. I did decide that this week I'm going to put in the IWM because it's certainly moving a little bit less. It's less volatile. Well, I'm not going to say less volatile. I'm going to say it is just a bit steadier on the upside. So IWM it goes up slower because there's so many companies in it, and the SPY is still like heavily Mag 7 weighted. So when Nvidia had a big pop this week and Google had a nice comeback this week, I mean, look at your heat map today. So FinViz heat map. I mean, we actually have, so yesterday we had about 66% of stocks declining. Today it's about 62% advancing. But you can see there's a lot of red sprinkled in here. So yesterday was like Mag 7 only, and then today's more like market breadth. So you're seeing healthcare come back in a big way, which thank God it did. I mean, I've got some exposure on UNH, which you might call me crazy for that, but I'm in UNH with two trades. I did a 270 by 260 ratio spread, and today I did a 165 by 160 ratio spread. The implied volatility is freaking off the rocker right now, and I'm not saying that we can't go lower, but I would think that very quickly this has some type of snapback. We have crazy gaps in this thing, and I don't know when and if it's going to settle, but if we just have a pullback into here, I'll pull back into here. Who the heck knows? If anybody has exposure in XLV, if anybody has exposure in the Dow, guess what? This stock is a big part of that. It's a big part of both of them. So, I mean, unless this is going to get dragged lower and dragged lower because UNH sucks so bad, I would think that this finally stops falling. I mean, by the way, this company made $400 billion last year in profit, and we're treating it like it's being treated like it's Peloton right now in 2020. It's just, I don't know what to make of it outside of this is a crazy, crazy decline. And it's fallen, 58%, almost 59% in the last month, and it's down just over 60% from all-time highs. So ridiculous drop in the stock. But I look left on the chart, I can see previous resistance in here. It did kind of gap through that level, so maybe that's not the bottom. But if we come back to COVID lows, I mean, my ratio spread is 165 by 160, so I think there's plenty of profit potential there. And even my current trade at 270 by 260, if we're putting in a bit of a bottom here in the near term and this recovers, I have these trades out to, I think it is, I know my 165 is July. Let me check UNH here. I mean, I did a leap. I went out to January, 246 days for that 270 by 260. So by the end of the year, is UNH back above 270, 260? Maybe. I would hope so. And there's my other ones here. So I've got another ratio spread here. So there's a ratio spread. There's a ratio spread. There's a ratio spread. There's a ratio spread. And there's a ratio spread. There we go. So there's my exposure. All right. What else? Let's go top down. So we're 0.2. I mean, today it's just a little bit of gain on the day. SPX actually gapped a little bit lower, fought its way back. Here's what the intraday price action looked like. So for the day, we took a couple of winners out of daily profit play this morning. So nice little winner there. Price goes up. It's been sideways from that point forward. I do wonder here in the last 30 minutes, I don't know if I'm going to get enough premium on this, but let me try to find out. If I take this trade, can this thing pin around SPY? Is probably not going to offer much premium if I do it today. Nope, that's crap. I'm going to look at a SPX maybe. Volatility is low enough. I'm probably not going to take this trade. Yeah, it's like right in the middle. Let me see where SPX is at. I don't think I'm going to take this trade. I am curious though. If I put in a trade, let me sell the 5905 call and sell the 510 put, and look at, let's go 20 wide, and let's go 20 wide. So yeah, so what should be an asymmetric reward to risk is now backwards. If I go a little bit lower in strike, yeah, it's just not great. So it's putting my risk profile in the wrong position. So I want to see a bigger reward than risk on the credit, not smaller. So I'm not going to take the trade. But if this was like a $775 profit for maybe a $200 to $300 risk, I might take the trade for these last 30 minutes and see if it just hangs out around this 59.10, 59.05 level. But I don't know. We'll find out. So I'll keep an eye on it. Okay, but overall, like, I mean, we're 0.27% up on the S&P. We are 0.22 down in the Qs, or 0.2 down in the Qs, and index is 0.22. Dow is actually up today. Like that's a pretty good comeback. I mean, healthcare sector came back in a pretty nice way today. XLV, it's been red all week, but it came back today with a pretty nice gain. XLV might be one of the better sectors today, so up 2.39% from the lows. We see that healthcare is up 1.26. You go to financials, up also about 0.75. That was holy crap, that's a wild day this morning. Up, down, back up again. Energy up on the morning, or up on the day. XLP up on the day. This is consumer staples, interesting. Consumer discretionary, flat, actually red on the day because of that gap lower. Communication services, up a little bit. Lyft, not a great day on Lyft, but I'm still holding this one for $18, $19, $20 upside. Uber, flat on the day. Some other stocks here. Let's look at market breadth for a second. Let me go to the daily time frame. Actually, let's go back to this chart here. Let's go back to this chart here. Let's go to market breadth. There. So 64% of stocks above the 50-day moving average. 48% of stocks above the 200-day. I said this earlier this morning. It is still very possible. It's still very possible that we are running into some resistance on the 200-day moving average with the entire market. So basically, we had this big decline in March and April. We fought our way back where a lot of the stocks, 52% of stocks, are still below a big fat 200-day moving average, right? So they're still below it. Now, to me, I mean, what I would think would be resistance. I'm hoping that we have like a little bit of resistance here, and then the markets have some type of pause in this like April 7 bottom and recovery, and then we figure out is this market truly able to cross and go higher? I mean, if it's just literally straight up price action, what are you going to say? What are you going to do? I don't know if that's the case, but I'm curious what happens when we're still sitting here when most stocks are below the 200-day. Is there going to be a period where that 200-day actually matters and it's going to hit some resistance? And if so, I'm just looking for a tiny little gap fill. I don't think it's that bad. A tiny little pullback, please, something. you know, just because I want to participate. I'm not saying I want to be bearish. I'm just saying I want to pull back so I can start positioning long again, not ride this stupid thing up $100 a share, you know, which is good, but I'm out of the trade. I bought it at 496. I dumped it at like 476, 480. So I'm out. I've missed out on these last like $10, $15 of upside. Anyway, so watching. I mean, big comebacks. I mean, Costco, curious, but like, are we putting in a topping pattern? I think we could have range highs, range lows. Walmart, range highs, range lows. We had, earnings today on Walmart. Nike moving nicely off the lows. I do have some puts in there, but I'll be watching those carefully. Home Depot, off the lows, but I want to participate in this one way lower at 285. Didn't get the opportunity. Same thing here on lows, way down here in the 100, 185 to 200 level. Didn't come close. I did take some winners on Mastercard. I had two trades here. I was short with I think I did a broken wing butterfly here for a winner, and then down here I did a ratio spread, and both played out really nicely. I did that on uh, MA for Mastercard, V for Visa. I did the same thing, bear call spread, broken wing butterfly, and a bull put spread. And then I was a little bit more aggressive actually on AXP, because I was like, well, this is kind of the 1% demographic. This is kind of the top 10% of consumers. This is typically a wealthier demographic customer. I thought this would be a little bit more resilient than the MasterCard Visa, but it didn't matter. They all did the same thing. MasterCard's back up to highs, Visa's back up near highs. AXP actually kind of underperformed, but it still snapped nicely off these lows at 230. My ratio spreads worked out just fine. Johnson & Johnson looking a little bit better today. I still have some puts on this one. Progressive Insurance, I mean, I did a ratio spread down here when it's at 240. This is probably still a buy trade in my opinion. I think it is. Tell me the last time your insurance prices went down. Probably doesn't. This is Chubb. Same thing. This expires tomorrow for full profit. Palantir poked the all-time highs. I got some ratio spread. I'm gonna let it run. I've got ratio spreads out to January, pulling in some income. Carvana poked the highs. Salesforce, no trade. Called the top here on O'Reilly, which was actually the right play. Redfin, nothing yet. I think the housing market is heading towards some trouble. Give it 6 to 12 months. Housing prices are probably going to have to come down in price. Everyone thinks their home is worth 3 to 4 times its value. Nobody realizes that it's funny money. No home should be up 3, 4, 5 times its value. I'm sorry, right? Equity, you pay in the home, you pay it down. That's fine. But if you're looking to sell your home right now, it's probably sitting on the market longer, or somebody's coming in to scoop it up, and you're going to pay more for your next house because we have crazy high prices still, and we have unaffordable interest rates for what we've seen the last 4 or 5 years. Now, the most of the country is sitting at a sub 5% interest rate. A lot of the country is also sub 4%. That was because of the zero interest rates we had during COVID. But for any new home buyers, we are literally at the most unaffordable housing market we have ever seen. It takes about 6 times the average salary now to buy a home versus 2 times what it was the last 30, 40, 50 years. Interest rates continue to go up, yields continue to go higher. So, like I said on bonds, I mean, I keep talking about this stuff. And this, look, I don't know how this ultimately plays out, right? I mean, I do have a legitimate concern that we are going to go higher in yields and the Fed is not going to cut rates, and it might break something a little bit. I think if the Fed doesn't cut rates in 2025, the market's not going to like it. Um, but I also think the Fed is, they're trying to thread the needle. I mean, they're basically not wanting to cut rates excessively. I don't think the Fed wants to see this. They don't want to see rates get cut and see yields go higher. So I think they would rather pause and see if that's going to be suppressive enough to keep rates under control. But of course, like I said, the market may not like that. Dean coming in clutch. Oh, you took till 10:39. Oh, that's nothing. You only took an hour today. That's fine. Good work, man. All right. So anyway, the 20-year, I did get this alarm yesterday. We poked above that 5% level. I'm wondering what's happening here. This could be like an interesting cap on the 20-year yield. This is essentially what I saw broke the bond market back in April. So if this continues to, come back down, come back up, come back down, if we drift higher, that's probably an issue. But if we come back down, it's just range bound, and you'll just see some oscillation here in yields. You see some oscillation and nothing going on in bonds. And we'll see how it plays out. But the bond market is the major liquidity to the U.S. market and to the global economy and to debt around the world. So many things are priced in U.S. dollar and so many things are priced with I mean, we issue debt like crazy. I get that foreigners technically own about 13% of our debt, but we continue to sell it like it's hotcakes. And we've been selling the short end of the curve for the last couple of years. I mean, this is through Janet Yellen post COVID. It's like, I mean, we've done some really radical things with monetary policy. And I think that, this was a little flinch in the bond market that could have been way worse, but it was kind of quickly backstopped by that, 90-day pause by Trump. So anyway, it's something that we have to keep monitoring. I don't know what this market would do if 20 years are higher. If 20-year yields are higher and 10-year yields are higher, I don't know how the equities market can continue to go hot. I really don't. And so this is the big like liquidity air pocket that everyone's talking about right now in the macro picture, which is that you don't pay off debt, but you refinance debt. Well, if the Fed has to refinance at a higher yield, well, they don't want to do that, right? Or if the Fed does cut rates, but it doesn't translate into mortgages going down or borrowing money for a car, financing anything for a business. If those rates go higher, then you're going to slow down the economy. It doesn't mean it has to break necessarily, but it can slow the economy down in a big way. So the Fed, if they can, like, I guess the Fed can pay back at whatever rate they want, or they can keep issuing short-term debt over long-term debt, and maybe that's what they do. Maybe they just keep offering like a slightly higher, short-term yield, and that's what everyone is buying as opposed to the long-term, which is getting beat up so badly that it just looks unattractive. So anyway, time will tell. But this is in the back of my mind as a potential major risk to growth. But I think right now it's like the market just doesn't give a crap. The market doesn't care. The swings and sentiment swings have been so extreme that we are now watching this. You know, I mean, are we going to swing all the way back up to extreme greed before we have a top? I don't know. We have a major OPEX cycle tomorrow. We have another one in June. We have the volatility index expiring, or there's a VIX expiration cycle next week on Wednesday. I do wonder if the market pulls back a little bit heading into these next couple of weeks. We still have a world trade war pause in July. I'm wondering what that does. We also have the Fed in July. Inflation data was really weird this week. If we go to inflation data this week, let's go from Tuesday to Thursday, where we had CPI and PPI. So Tuesday, CPI data came in line with what I think everyone was hoping for, which is lower inflation, right? We'll go year over year. So core CPI 2.8 came in 2.8. So it was the same as previous, same as forecast, came in as expected. That's fine. The CPI headline 2.4 previous forecast to 2.4 came in 2.3. Everyone saw that as a good thing, right? PPI, and I don't know how the numbers got so bad, but the release was this morning at 8:30 in the morning, and today's PPI data didn't really make a lot of sense to me. These revisions were absolutely abysmal. Like negative -0.1 now revised up to 0.4, 3.3 revised up to 4. I mean, that didn't make the market flinch at all today. So I don't know if we just kind of get through this and we peak out like May 16th and then we spike. I don't know. It's just it's a weird way to see that. CPI was pretty much in line with lower inflation, and PPI is like, well, it's because they front loaded on tariffs and producers are paying more. They're not going to pass it on to. I don't freaking know. So the market didn't have any adverse reaction to seeing these pretty terrible revisions. Revise higher, revise higher, revise higher by a lot. So anyway, jobless claims. And we're not, and again, everyone's talking about recession. We're not seeing that. Initial jobless claims. If you want a job, need a job, have a job, and you can get a job, then there's no recession. So until this trends higher, okay, until these trend higher, there's no recession. And I think everyone needs to just come to grips with there's no recession unless people start losing their jobs. Now, are we that close to AI? No, we're probably years away from like AI replacing everybody's jobs. But if this does start to trickle higher later this year, like when the federal government laid off all these workers, like 257,000 workers, are they coming back to the private sector? Will it show up as unemployment in September, October, November, December? Maybe it will. So, I mean, these are two things to watch in real time. If this is not ticking higher, if this is not trending higher, then we're not in a recession. So, I mean, that's fine. But I still look at price action, and I would just hope that we have some efficiency. This market has gone from inefficiently bearish to now inefficiently bullish. Let me check one thing before we kind of wrap things up here in the next 15 minutes. Let's go to a workspace here that has some overbought, oversold. Let me find my harmonics and pivots. There we go. Okay, this is a noisy chart, so excuse the garbage I have on it, but just let me have some fun here. So on a daily zigzag, we're just kind of, I mean, it's just adjusting every single day because we're poking these highs. But a zigzag pattern is typically a topping and bottoming formation. But here's what I want to add to it. Okay, on the daily time frame, we're not overbought yet. Okay, now are we on? Let me check one more chart. I've got a weekly macro as well. I'll just compare a couple of like standard indicators versus my custom ones. Here's Mighty Macro. So I just built this workspace as well. Let's check this out on. So Mags is nowhere close to overbought conditions. That's a weekly time frame. Nowhere close to overbought conditions. Right? We had this crossed over with a zero line. We got a buy signal on the weekly, which is kind of freaking crazy. I'm not saying this is like, oh, this is perfect timing on the MACD. It's really not. Take a look at the daily. Right? I mean, the daily's already been a buy signal since pretty much the day after April 9th. This was where this thing crossed over. So we are getting closer just in the near term. This is a daily chart SPY. We're getting close to the, this is I want to say 14 period and 20 period RSI. Let me double check that. Yep. So we got a 14 period and a 21 period RSI. You can see them working in tandem, trying to find that 70-30 overbought, oversold. And we're not quite there yet. But if you look left on this chart, you can see that in the cases that we've been running hot for a while, we do get overbought conditions. Running hot for a while, we do get overbought conditions with divergence. Okay. So my point is, are we going to see this like continue to go higher until we hit overbought conditions and then level off? Money flow continues to look pretty good to the upside. I mean, I am seeing this in the histogram though. Look at the MACD histogram, lower momentum. So there's a bit of divergence coming in this higher time frame. I want to look at this chart as well. Let me find this guy here. So are we overbought? No. Are we showing divergence on the daily? A little bit. So here's momentum. If I have price here and price here, that's a disagreement with momentum. Okay, so that's my disagreement. That is divergence. Are we at an overbought condition for that divergence? No, we're not. But this is also a 21 period. If I change this to a 14 period, which I'll do that right here, we change this really quickly to a 14. That's more industry standard. So we are creeping up to divergence with a 14 RSI that's overbought. That could be enough to get this market to stall or pull back just a little bit. And again, I'm not doing this to be bearish. I'm doing this because I want a dip to participate in. Any type of efficiency would be fine by me. I priced this out yesterday. I'm looking at anywhere between like a 3 to 5% pullback would be awesome. I think we could pull back as much as 10%, and I'd still be bullish on these markets. But a 3 to 5% correction would be very near term, and just give me a gap fill. And I'm hoping that's like by the end of the month. Okay, so we'll see how it plays out. Because otherwise, it's like, do we just go dead sideways next week? I mean, either this. I mean, if this market melts up higher, then okay. I just don't know how much I'm going to participate to like buying more. It's like, give me a dip. Please give me a dip. That's all I'm asking for. And it kind of sucks to feel like, am I missing out? Should I just buy? It's like by the time you start to justify and rationalize buying more at these levels, I think no, it's not MP. I did a small hedge yesterday. You saw that in my session. I did a 590 by 580 bear put spread. I paid 380 for it. I paid 378 for it, and it has potential to pay me $10. So I did a small hedge, a very small hedge, but I'm not doing anything crazy aggressive. So even at the highs, it's like I don't know how aggressive I'm going to get at the highs either. I mean, I think I'm going to, by necessity, put on a hedge. I think I should, in case the market has its whatever. Maybe this is a monster range that we're about to deal with. Maybe this is a big range, right? And as good as we think things are right now, it's not as good as maybe just retesting highs and then stalling or failing. Because at these valuations, we can't justify going higher. Look, if we blow the tops off these highs, I think I'm going to have the same idea as what I had back in 2018 and 19 when the market recovered up into the 2020 turn. I was bearish as in like this is an asset bubble going into 2020. COVID was the excuse the market tied to the decline, but we were due for a pullback. We were totally due for a pullback. So if we go up and break these highs and blow through these highs, I hate to say it, but like it's just a matter of time before this is another asset bubble. So, um, like I said, I don't want hedges to be something that costs me an arm and a leg. A hedge is going to be like I lose a fingernail. It costs me a fraction of 1%. If I let it go in the bigger picture of my portfolio, I'm still up, and I can toss away those little trades. It's not fun to lose them, obviously, um, but it also is there when I need them. Because if I have a hedge work out, I usually get 3 to 1, 5 to 1, 10 to 1, sometimes more, and it helps me alleviate some of the drawdowns. So, anyway, long story short is this. Zigzag is looking for a topping pattern. We do have some divergence on the momentum indicator. The 14 RSI is very close to getting overbought conditions, which you can see here. It can stretch longer, right? But when we hit, some higher highs in the market, it's ready to turn at some point, especially when we see divergence and overbought conditions. So with some divergence here and nearing overbought conditions, I can see the market having a little bit of a correction sooner than later. And when I say sooner, I'm hoping within the next maybe 2 to 3 weeks we have a bit of a pullback in the markets. So that's SPY. Let me go QQQs. QQQs. Well, Nasdaq, interestingly enough, has hit overbought conditions on the 14 period, but it also, busted the highs out on the momentum indicator. So I don't have divergence, but I do have overbought conditions. So I think it's going to have to maybe have another, few days of price action, maybe another week of price action, and we'll see if this is, slightly sideways, maybe a little bit higher. But if this starts to go, lower highs in momentum, higher highs in price, again, I think it's just a matter of time if we get overbought conditions that this thing starts to correct. Okay. So that's Qs. The Dow, looking at the Dow, we're not quite at overbought conditions. We do have some divergence on the Dow, which I see this high, this high. So divergence on momentum, we're going slightly higher, but it's not overbought yet. So, there could be some momentum left in this. There could be a little bit of drift left in this. The Russell, we had a little bit of a pause right at the 200 moving average. We're sitting here with momentum at the highs, but it's not really going higher. We're just off of the overbought condition. So we will see. But again, like all my zigzag patterns are looking for tops to form. So, look, the market makes a high, makes a low, makes a high, makes a low. It's like this eventually is going to have to stop at one point and then have a pullback. And I just don't know how deep that pullback is going to be, but I'm willing to say that these markets could pull back close to 10%, and I would still remain bullish in the overall posture. Okay. So we're at 59.15 right now. SPX, we are at, I guess 59.12. I think my freaking chart froze. This one's fine. 59.12. SPY is at 589. So the butterfly spread today worked out really nicely. That was a 590 by 592 by 588. That was about a 35-cent debit that paid 75 cents credit. Not bad. I took the wins this morning on daily profit play, which should have been right here. Had a couple of winners this morning. I know the market ripped up after about 11 a.m., but it didn't matter because we were out well before that. So off we go. What about DAX, FTSE? I took a look at those today. I'm hoping that, DAX, for example, pulls back. I mean, it's like, come on, dude. I can't justify. I mean, if you participated in here, you're just loving this trade right now. All I did when this market fell is I bought FEZ. So FEZ is the ETF. Like it's an ETF for me as a US trader, and I bought FEZ. Right. So I bought this thing at the 200, right around $51, and it's up to $58. Like that is good. But I look at the DAX, I'm like, can we pull back? All I've done is I took a low to a high, and if price goes higher, I'll keep stretching the fib higher. But if price pulls back, I mean, look, if you're a bull, pull back to the 23%, pull back to the 30%, retest the high. Pull back to the 38%, retest the high, and then some. Garner some momentum in here with a pullback, and then see this market actually make a swing. I'm hoping we have that. I mean, there are some inefficiencies back here for sure, and I could see us pulling back easily to the 23% or to the 38% to the 50%. But if we just keep freaking grinding higher, it's like I don't know how to trade that. I don't want to chase all-time highs. I hate that trade, so I won't. It's like, well, I guess I'll just not really watch it, and I'll just let my FEZ continue to gain because it was an easy, cheap ETF to trade. Are you looking at 12, 25, and 30% below? Um, yeah, I mean, just off this recent pullback. Thank you, Brooke. That is my fiance sitting right here in the room. She's spoiling all the fun. Yes, it is my birthday today. 12, 25. What do you mean by that, William? 12, 25, and 30%. I'm looking at a 23, 23, 30, and 38%. That's what I'm looking at. So, and look, we can pull back 50%, but it's like in this area, to me, that's a dollar cost average win. Like you pull back into here, unless this market is going to be like a fake out and a broadening pattern, and this is a bull trap and the market's going to fall. I mean, this can obviously adjust and morph into something different, but I think if this market is eagerly excited to see Eurozone is spending money, US is spending money, China is spending money, the world is spending money supply is going up, this is why the market is optimistic, right? All of the damage and all the concern and all of the things that were going to be so restrictive are now like, well, I guess we open the floodgates back up for volume and volatility and money flow. So I like I said, I just don't want to see this go up forever, right? I just want to see this pull back. So I'm trying to be patient. I'm trying to get a pullback. Thanks, MP. Thanks, Alan. Thanks, everybody. Am I 31? Totally. Totally 31. Nope. I'm 43 years old today. Oh, man. Does writing calls in FEZ make sense? No. Writing calls? No, I sold puts, Manny. I sold puts rather than writing calls. I would not. Are you saying you want to like sell calls against shares you own? I mean, it would maybe make sense to me, but the premiums are kind of shitty. They're kind of garbage. So I got in it mainly because I wanted to own the cheap ETF, benefit from this. I also did SCHY on a Schwab ETF that was also an international base ETF with Europe and China, and that one's up like 12% this year. So that was, I mean, this conversation happened months ago when it was like, I like the non-US exposure. So between gold, silver, Bitcoin, Europe, China, Latin America, Brazil, all those right there, that's 7 different instruments that I'm trading, that is not really concentrated in the US, not really correlated with the US. So if those outperform in 2025, then it's not a big chunk of my portfolio, but it's enough of an allocation to make a difference where I can see if the US is a little bit of struggly, then the other should pick up the slack. Right? Yeah, I see what you're saying. So covered calls, yes, maybe, but the premiums aren't that great. If you go to FEZ, essentially you're going to get money for at the money. So if I want to do, I'll say 30 days out, I mean, I've got to go in the money to get $1.60, which is kind of lame. If I go, 40 cents out of the money, I'm getting 90 cents. Like the expected move out here. I mean, if you want to just lower the cost basis, it's fine. Like, sell a 60 or 61 and maybe you get 50. It's like, but what if it just goes up by another 3 to 5%? I'd rather take the appreciation on the underlying versus trying to sell a covered call. So when I'm ready to dump the shares, when I'm ready to let go of the shares, then I'll probably sell an in the money covered call and let it go. But I think if this is going to run and it's going to run hot, I don't really want to stop it. I mean, look at Argentina. Argentina was an ETF that has been, think about this. Let's just put our thinking caps on here. What if this was the DAX high that just came down to the 200 and now it's back above it, right? What if the DAX is about to do this and just keep going? I don't want to sell covered calls against that and lose out on that type of appreciation. That type of move is massive, right? Like this dip, I mean, Argentina ran up 80%. So we're talking about the DAX that's up, 20 plus percent. It's up 29%. Can this get to 40? Can this get to 50? And this have like one of the best runs ever? Maybe. So if the premium was better, then yes, I'd write more covered calls or I'd sell them against my shares. But I'd rather just, when I'm ready to dump this thing, where I'm just like, holy crap, this market has gone, let's say it's up here, right? Let's say we're up like 50% for the year. Then I'll probably just put in a trailing stop loss, to be honest. Just put in a trailing stop loss, let it get knocked out. If I really want to sell covered calls, I can, sell a call against it. But I think just letting this thing run might have some surprisingly good legs. Nice. Um, thanks, Lee. Charles, that's super kind. Thanks for saying that. Brett, oh, we got a birthday for Brett tomorrow. Brett, come on to the final hour. We'll say happy birthday to you. The big 6-0. That's a good one, man. That's time for a celebration. All right, very nice. All right, everybody. Market is closed. S&P up 0.4%. SPY 0.49. Qs underperformed the SPY today a little bit, 0.11 on the Qs. Dow up 0.68. Best performing index today. Russell up 0.63. So I think the comeback on the Dow was pretty nice on healthcare. We did see the sectors do pretty well. So XLV. I'm just going to look at the daily candle really quickly. So up on the day for XLV, up on the day for communication services, up on the day even though it gapped lower on discretionary. Big rip on consumer staples. Holy shnikes. Like, again, massive rotation. Like, what on earth? It's like, okay, consumer staples, that's freaking defensive, right? Healthcare, that's freaking defensive. Like, what is going on? So you got to wonder, like, if everyone just, the growth has been like pumped in, like you get the April 9th, you buy the Qs, you buy the tech that's so beat up and nobody wants growth momentum and you buy it. And now you're starting to dump it, maybe. So we'll have to see what these inflows outflows look like the next week or so. But XLP had a freaking great day today. Energy, another decent candle. Started lower but worked its way back up. XLF up a little bit, not a super high mover. And then XLV, nice comeback trade with divergence at the bottom. Oversold conditions and divergence. So I'll go back to this chart here. Let's go to XLV. Oops, XLV. We are seeing lows and lows and higher lows here. So that's hidden bullish divergence. We have some MACD divergence as well. We don't have, this is kind of your time to buy it if you're looking to buy XLV. I'm already into some option trades because I'm, early like that. But if we end up getting a crossover here on the MACD signal line, that maybe this is signaling a chance to get long and see if this just kind of pulls back into this area. So if money flow starts to go higher, this higher level, we start to go trending higher in relative strength. That could be a good sign for XLV to kind of put in a bottom. So we'll see. This chart here, let's go to XLV and then I'll let you go. Gosh darn, I did it again. XLV. Yeah, same thing here. This is a daily time frame. Divergence on momentum and hidden bullish divergence on relative strength. Fresh lows, but the zigzag looking for hopefully a bottom to form. I'm in. Like, I'm already in. I mean, I'll see if XLV cooperates this way or if UNH. Look at this thing. Holy shnikes. This might be one of the worst oversold readings I've ever seen. Like, literally ever seen. So you talk about a standard deviation move, like we are talking uncharted oversold conditions here. That's wild. So perhaps I am getting a bargain on some of the ratio spreads that I put in. But I'm certainly not calling the bottom. I'm just giving myself some time. So I've got time. I've got some risk in the trade. 260 is a line in the sand for me. If I own the shares, I'll own it at 243. I would hope after being on 60%, this stock will stop sucking. And then I put on one today because the premium was so good. I put on a ratio spread at the 165 by 160. So either way, I think I can come out on UNH ahead, which is, this is the fun part about trading options is this stock is down, 60% and 58% in the last month. And I could somehow turn this and say, yeah, I could probably make money on this trade, and maybe I do, maybe I don't, but I think I'll figure it out. Yeah, MP, somebody asked me about that earlier about the fraud. I mean, okay, what are they going to do? They're going to shut them down? This company made $400 billion more than Google last year. I've said that multiple times. It's like they get shut down. No, they just pay a fine. They pay a fine. They figure it out. They clean up their act. I mean, that'd be like saying Wells Fargo is going to get shut down for fraud when they open up a bunch of fake accounts. Wells Fargo is still a massive bank that's too big to fail. So unfortunately, I think UNH is the same thing. And at some point when all this crap stops getting priced in, then it'll probably reflexively work its way back and we'll have a rally from whatever this low is in. We'll probably rip back to $300 or maybe $350. And that's UNH. So, I mean, yeah, I'm concerned that it's been punished so harshly, but on the technical side, the premium is so good. I'm like, I'm taking a stab at it. I hope I don't regret it. I mean, it is risk, but I think I can figure out the options market in the next like 30 to 90 days. So, all right, everybody, I'll let you go for today's final hour. Sorry for the late start again, but these webinars keep getting scheduled on me, and they're getting long. Where I end up going like from 2:30 to 3:30. So I try to get into these sessions as quickly as I can. That's going to do it for today. Let me check my calendar really quickly, make sure nothing else is coming up after this. Anything else for May? I think that's it. Okay. I'll let you go for today. We'll come back and do it again mañana. Let's see what tomorrow brings with a major OPEX cycle. We have stock expirations, options expirations for indexes, ETFs, stocks, maybe some futures as well. Let me see if it's a futures. I don't know if it's triple witching. Yes, May 15th and 16th. I mean, we do have some futures expirations tomorrow as well. Take a look at VXX futures. I think VIX has expirations next week. May 21st. So I think this is Wednesday next week. Yeah, Wednesday next week we have a VIX expiration, so that'll be interesting to see how it plays out with like this VIX getting smoked to the downside if there's a little uptick in volatility and a little decrease in the markets to fill some of these gaps. So yeah, give it a week, we'll find out. All right, thanks everybody, thanks fam, thanks Alan. Appreciate everyone being here as always. Kindly hit that thumbs up button and see if we can get this, see if we can get the YouTube channel to post up in everyone's. When you get your like YouTube channel side list when you're watching, like see if this video will pop up. A lot of that is when you're here, you're engaging, you're clicking the thumbs up button. That's all. I mean, that's all it really takes for that YouTube algorithm to be like, yeah, people like this guy, people like this channel. Um, Unfortunately, I think that I dealt with some scam crap earlier, so I'm still trying to like figure out how to get this like pure, less scammers that get the same stupid comment like every week. That's like, oh, sorry, OKC, Bitcoin, Ripple, blah blah blah, and like just remove comments. So unfortunately, I'm dealing with that. I could rebrand the whole thing, but I'm good just doing my thing. All right. Do I have learning material? I do. I've got lots of learning material. If you're in my Discord channel, here's a good place to find it. So I'll show you this really quickly before we go. In Discord, so here's my link. I'll post this. This is good for 30 minutes if you want to join my Discord. So let me find a invite link here for the next 30 minutes. New link, copy. So this is Chris Pulver Trading Discord. Okay, quick disclaimer. You come into the Discord channel and you read the rules. This is me, right? All open for traders. It is one to all. Like I post these messages. You can comment in free group chat in Forex and stocks and options and futures. You can post comments wherever you want, but it is for everybody to see it. So I don't like a lot of private messages. I don't send friend requests. I don't like private messages I don't initiate them, right? You want to contact me first? That's fine. This is my profile. So if you come in here to read rules and you want to post a private message to me, find me. That's me, right? All I'm saying is I don't send direct messages directly. I don't initiate direct messages. I don't solicit and send friend requests. That's scammer crap that happens in Discord, unfortunately. Same thing on Telegram. I have one Telegram channel. It is Chris Pulver. This is me. It's one to many. Nobody talks to me on my Telegram other than me posting, right? So point is, Discord, I just want to make sure we're all on the same page. You can all comment here and here and here and here and here and here, everywhere we want. That's fine. What I'm saying is my education stuff, education updates, I have a lot. So I have services here through Prosperity Pub. Daily Profit Play is a daily service. We trade the SPX every single day. Waterfall Income is a swing trading service I trade every week. Double Up is the biggest trades I take. SPY, QQQ, and Mag 7. I focus on those every single week. Newsbreakers, I'm trying to find some trades this week. I'm going to let the shop one close tomorrow for hopefully over 106%. That'll be a closeout tomorrow by end of day. Project Options Edge is more discretionary. I'm also launching a scanner, a dashboard and scanner for a trade generator this month. It should be at the end of the month. And I'm excited. That's been in the works for like 4 months now. And I'm just getting the data finalized, making sure we're getting real-time feeds. And everything looks pretty good. I've had a couple beta tests. They've gone well. So anyway, that's coming soon. I've got other alerts. I've got some education out there like Survival Trader Toolkit. That's an old patterns video. I did like 11 videos back in the day. Practical Options. This one's $27. This one's $4.97. All these services offer up a year of service, time with me, live trading sessions. So pick your poison. There's plenty of stuff. It's like you don't need to buy everything. Find something you want to trade. You want to trade, currencies. then probably get Survival Trader Toolkit because that's what I did. I managed a currency fund for over 10 years, right? I am now trading heavy amounts of stocks, options, indexes, ETFs, and that's my bread and butter. That's the best way for me to produce the risk-adjusted returns that I want, which is the most money I can make with the least amount of risk. And so that's what a lot of these services are right here. Is a lot of stocks, ETFs, and options. Okay. If you have any questions, you can hit me up on Discord. You can ask in the public channel. It's fine. You can hit me up with a direct message, and I'll reply. But just make sure it's me that you're messaging. Okay. If you check out the Practical Options Quick course, like I said, this one's 27 bucks. That was an upgrade to it's 497. I have all those links in here. So here's Practical Options. That's the quick course. I have that's this YouTube channel alerts. There's my full course for Practical Options. And then, I mean, it's just you can find it, right? You have any questions, hit me up. But there's lots of education also in discounts, affiliate discounts, software discounts, trading subscription discounts, stuff I have in the industry, people I work with. If you open up a Tasty Trade account, I've got a affiliate link or reference code if you want to use it. I've got discounts on Edgeful, which is a dashboard that you can trade futures and stocks and options with every single day. Dynamic Trends is my aggregate feed that gives me liquidity and order flows every single day. I use this every single day. Tasty Trade, there's my profile or my reference bonus. A1 Trading for alerts, and again, it's all there. So between education updates and affiliate discounts, that's all the education stuff. And then I do work with a lot of private instruction students. So if you have any questions here, I've got some QRCs. If you want to do, I offer 1 hour, 4 hour workshops, and we can divvy it up however you want. But I work with a lot of individual traders and small groups out there. So hit me up. Off you go. Any good videos on how to use TradingView? If you're new to TradingView, I mean, honestly, you can just probably look at a YouTube video. I mean, you can look at a YouTube video, and I mean, TradingView is easy, man. I mean, if you want to type in something in your watch list, it's like, okay, I have a watch list here. If you want to add a symbol, I build out my watch list from A to Z. Charts, I type in any symbol I want. They have so many different feeds all over all the world with brokers and feed providers. So I mean, TradingView has been like the gold standard of charts for a while. I also post a lot of videos on TradingView, so I'll do like a once a week update and just where the markets are at. They usually pick my content for an editor's pick, which is kind of cool. But I mean, the charts are great. You can add indicators. You can do, I mean, stuff down here. I don't do a lot of this, like strategy tester, a lot of scripting. I've coded my own stuff now with ChatGPT and OpenAI. I've coded some custom indicators. I run it through a couple a couple of times, and I try to get something I'm really happy with. But I'm gonna find out what my kid is crying. So anyway, but yeah, TradingView is great, and honestly, a simple YouTube tutorial would be great. I'm sure TradingView has their own stuff as well, but to me, if you've used any other charting software, TradingView is pretty intuitive. You got your tools over here, you got your symbols, you got your timelines, you got your price action style, all the indicators you could think of, and there's also tons of custom indicators out there. So I would say the sky's the limit. You can make your charts look as clean or as messy as you want. But at the end of the day, I just want good, reliable price feeds, web-based charting that lets me, trade on the if I'm remote or trade like I do every single day in my workstation. All right, I'll wrap it up there for today's final hour, buddy. Thanks for being with me today, and have a great weekend. Well, I see you tomorrow. See you tomorrow. Thanks. Bye.